Good morning, good afternoon, and good evening. It's Doc, North America. Fun-filled, exciting, or not. Let's see what's going on. It's Thursday, so I'm feeling really happy about the idea that tomorrow's Friday. TGIM, thank goodness it's Friday. And then usually by the end of the day and into Saturday, I'm like, can't wait for TGIM. Thank goodness it's Monday. So every day is a fun-filled day with me in my head. So, excuse me. No COVID, no COVID. We are looking at, what do we got up on the screen there? You can see it. The Swiss, you can see it's going up. Dollar seems to be falling, or going up. In other words, they're buying dollars again. It just doesn't seem to ever stop. It goes down and up, but overall, the overall trend of the dollar is strength. It really is. And they talk about it's going to fall. Someone said something about the reserve currency disappearing. Who was it? It was Druckenmiller or something like that. One of the big fund managers of old. When fund managers actually meant something. Druckenmiller's fund managers don't seem to have much validity anymore. They're just kind of going through the steps because now the last buyer of resort is the central banks and the Federal Reserve, so it makes it a whole different game. But anyway, dollar just finds a way to go up. And when they knock it down, they find a way to go up. When we saw that Swiss franc head all the way down into the 89 area in 88, we thought, wow, maybe this is some real sign. Nah. Next thing you know, it was trading at 94 again. It was like, whoa, where'd that come from? So in other words, they are going to keep it in some type of range that we always try to theorize exists. And, we don't do the best of jobs of defining it, but we get closer and closer. There we go. We got the chat line up. Hey, Stefan, how you doing? Martini, I like that. Oh. There we go. We got the chat line up. Oh, let me kill the volume now. There we are. Let's see. I have a question for you today. Well, I say it's cheaper by the dozen, so you can have 11 more after this one. How's that? Fire away. What is the question? Why is the sky blue? Was there really an X-ray blast that actually knocked out the pipeline here in the United States and it's not ransomware? I don't know. Tell me about that, huh? We can go into... matter of fact, maybe we should do that. As we do the webinar, what we'll do is we may go into some actual mathematical proof that shows that the pipeline that supposedly is being hit or was hit with ransomware was also hit with a unforeseen. In other words, when I'm saying unforeseen, it got hit by a big major X-ray blast from our sun. And you can see from the shots, the satellite shots, that it actually, you can see the X-ray blast going up and down the same place that the pipeline is. And, you just don't know. Without a free media in this country, you have no idea what is really going on. There's so many crazy things that are going on that I'm willing to accept that it could have been just that, and the Biden administration is just taking advantage of it because their objective is, number one, is to terrify our population into submission. Let's see, Martini says, I saw the volumes are very, I saw that volumes are every day bigger at 13:30 UTC. Okay, so that would be 9:30 Eastern Standard Time, right? Are we on the same coordination? And I'm on at 12:30 UTC, Universal Time, right? Let's just confirm that. So, Martini, Stefano Martini, I am on at 12:30 UTC, correct? And then so he says, and gold and copper and many currencies, okay? Particular motivation for this increase in volume. Well, let me just double check. I think, I always say Greenwich Mean Time. Europeans like to say UTC. So let me just confirm we're talking about the same thing. I had this conversation last Sunday with somebody. They were trying to tell me UTC, and I was saying Greenwich, and they said I'm not sure if that's the same, and I said that it is the same. And so let me just double check. I have the answer for you already too, so that's not too bad. That's a really good thing. All we really need to do is just confirm the times. So UTC 1330 is yep. Okay, so here I have your answer already, so it's not a complicated answer. And the answer is that's the opening of trading in the United States on allegedly, or what do you want to call the trading floors. So that's why you see the increased volume. Now you have, and we've discussed this too here. So this is a really good learning lesson. What happens is this. I had this in what's today? Today's Thursday, right? I might have mentioned this on Monday actually. I know it was Monday or Friday of last week or Tuesday. I mentioned this, and that is that volume. Is it volume? No. Okay. The volume you're seeing at 9:30. Most of it is from outside the United States, coming to the trading floor on the at 9:30 Eastern Standard, or the opening of the NYSE, and all the I mean, there's no doubt gold trades at. I think they start trading gold at 9. 1300 UTC on the floor here, but there's no real floors anymore. I mean, there's a half a dozen people down there at best. It's not like when I was young there could be 9 or 10 people in a trading pit. There could be 4,000 or 5,000 traders, or 3,000 or 4,000 traders and clerks on the floor. Now, there's just a handful, nothing meaningful, because there's not really a real trading floors. I mean, trading floors exist, but they're not. They're not. Everything's done electronically now, or almost everything is done electronically, and they keep everything backed up by having some people down on the floor just in case. Matter of fact, when you see an initial public offering of a New York Stock Exchange listing, now that's magical words all the way across, but what that means is that you're a company, and now you're going to float some stock. You want to finally get some money for what you've invented, and you have earnings, and you're growing and so forth, and maybe you're called Apple, or maybe you're called Amazon, or maybe you're called whatever, whatever company you were, you put your stock out there. Okay, there's a stock syndicate of brokerage companies that float your stock, and they sell it to their customers, and then they make it a listed stock. It goes through the New York, the Securities Exchange Commission, and it goes to the trading. It becomes listed on an exchange. Okay, we'll just leave it at that. And so then what happens is that the product is listed, and you see nowadays they put, you see all these people standing on the trading floor, trying to open up the stock. You see it in these new companies like, Lyft and Coinbase and, all these other companies that now are new companies, but the old companies had to do the same exact thing. But nowadays, there's nobody on the trading floor now. And so just a few people here and there, like not even 3% of what used to be there. It's that small. It's like, 100 sigma for you physicists out there. So, and the end result is that the volume comes to the floor at 13:30 UTC, and America starts trading, just like at 2:30 in the morning our time. London gets going, and Frankfurt gets going, and Switzerland, and Madrid, and wherever else there's an exchange, Amsterdam, you name it, wherever it is, and so that's why you see the volume. The volume is literally that. Now, most of that volume in the first 10-15 minutes is outside the United States. It's not from inside the United States. Tesco, hey! Testo, how you doing? So the volume kicks out. Inflation narrative. Yes, I do that every so often. We see a heck of a lot of equity inflation. So that's your answer, Stefano. It's just the get going of the U.S. market, and we are a very big market, and so we have a lot of participation, and you see a lot of volume. Remember, I had this conversation about smoke and fire, and you might be hiking out in the woods, and you're up on a hill, and you see smoke in the distance, but you're in a forest. You can't tell what exactly it is. Is it a controlled fire? Is it a wildfire? Or you don't know if anybody's around it. There might be people sitting there cooking hot dogs on it. Where there's smoke, there's fire, but it doesn't necessarily tell us much more than that. And fire can be good, fire can be bad. So, all right, now for testo, inflation. We've been going through an asset inflation, okay, and now it's starting to perk out a little bit more. And we've been seeing it. And what I mean, it's a twofold, or probably more than that. But let's just break it down into a twofold. One asset inflation we've been seeing, and one inflation we've been seeing is asset inflation, and ever since 2008, the price of stocks and commodities have been rising slow and steadily. Okay, and that's because the central banks and the U.S. Federal Reserve are trying to hold. Remember, the world went bankrupt. See, that's a problem, Testo. Most people don't know that the world went bankrupt in 2008, and we are living. We are still a part of that bankruptcy, and so we lost Lloyd's of London, and we lost Merrill Lynch, and we lost HSBC, and we lost Citibank, we lost Deutsche Bank. We lost Lehman, we lost Bear Stearns, we lost Wachovia, Santander. I mean, we lost a lot. Did I say Lloyd's in London? That's the one that always blows my mind, is we actually lost Lloyd's in London. Now, they still exist in name because the big facade is going on. That's why I say it's very hard to have a good, clean conversation about what is going on in the world when you only have a small group of people controlling the media here in the States. So, like I was talking with Wynn yesterday from Dukascopy, and some of almost everything he says comes from like CNN and MSNBC. It's like they're part of the spin machine. I mean, they're controlled by the Democrat Party. They're not going to tell you anything more than what they want you to believe. And it doesn't matter if 90% of it's wrong. They're going to repeat it morning, noon, and night, every day, every week, every month, now every year. And in particular, what's worse about it is ever since 2008, they don't really have the honest conversation anymore about any of these problems. Okay, it's all spin, just for whatever the party says they want. That's it. Nothing more than that. They're controlled by 6 Democrats, and they own the controlling shares of all the media in the United States. Pretty much over 90% of it. Maybe 10% is free. The other 90% is all controlled by those 6 Democrats. Okay, it's just a fact of life. So, when it comes to inflation, we've been seeing the inflation in the asset class more. Stocks and commodities and so forth. They've been rising slowly. And from there, we've seen companies like, when you go to the store to buy something, you'll notice that every so often the package becomes a little bit smaller, and they have an ounce less in there, or half an ounce less, or 2 ounces less in there, and they're charging the same price. So we've been going through this price inflation. Now, with an administration like Mr. Biden's, who is very strong in socialism, and communism, and they really support those concepts. They think they're better economic concepts than capitalism. And when you have people like that now in full control, you're going to see even more accelerated inflation. Okay? Now, I guess let me tell you the good thing about what I see about inflation right now. The good thing is that the central banks and the Federal Reserve have trillions, not billions, not millions. They have trillions out there holding up the world economy from the financial crisis of 2008. But the good thing about that is that they're the ones who are in charge of how banks lend money. Okay? And so what they've done is they've tightened the rules so that the money that they're lending out at enormous rates are not put into assets that are hollow, I guess you could say, or worthless. Okay? They have some value. Now, they're inflated value, but at least they have value. So, in other words, back in the old days when we had inflation from pre 2008, it usually was from a chaotic situation. Economies got hot, assets were overpriced, and then they were lost, and they didn't exist anymore. And so then what happened was there was nothing around, and when people needed something, it drove prices up. Okay? We're not in that situation. So in other words, Citibank, which trades pretty much still at bankruptcy prices, and same as Deutsche Bank and so forth, they are just shrinking their swap portfolio, and whatever money they make now, it's because the central banks plowed billions and billions into their accounts, but they're not allowed to lose it. So what they do is they slowly earn, and here we are, what year is this? 2021, right? So we went into this crisis in 2008, and so that's 13 years ago, okay? And so they have been healing. And there'll be a day where it will come around that they'll go the way of Merrill Lynch, where it was basically married into Bank of America. Now, there were banks and companies that survived and didn't do bad at all. They survived and they grew. And so what the central banks did across the world is they forced companies, if they couldn't force the ones that were going bankrupt into a second company merger, what they did is then they took them over. Like the Exchequer controls, was it Bank of Scotland? And perfect example was that Bank of Scotland situation about 5 months ago. And we talked about it here in the webinar. They couldn't really merge it in with anybody, so the Exchequer ended up buying it. Same thing they did with Lloyd's of London. The Exchequer controls Lloyd's of London also. And so then what happens, the name's out there, everybody thinks, oh, well, things are okay, but no, they're gone, they're bankrupt. And then what happened was that they still have the stock floating around in, Bank of Scotland, and all of a sudden, the Exchequer is selling 7.6% of the stock out of nowhere. And people were like stunned. They're like, where does the Exchequer get a right to sell 7.6% of the stock? Well, it's because they own all of it. Or they control, let's put it this way, they control a lot of it. And so, it's still floating out in the market, but they control the bulk of it because they pretty much went out of business. So, same thing with HSBC and so forth. And so, like, for 2 days, the media is like, what happened? How does the Exchequer sell 7.6% of this company? And then it gets quiet, and the story disappears. Because first it was the public that made the noise about it. People were upset, especially in Scotland. They were like, what is going on here? Where's the Exchequer down in London? We hate London. How do they get a right to sell 7.6% of the company? It's because they own it, because they went under. And so that is our inflation situation. And so will it get like 1930s, Germany with a wheelbarrow and a bunch of Reichmarks and so forth? No, it's not going to go that way. At least not here in the United States and in the industrialized nations. No. Now you're going to have you have those problems already in Zimbabwe. I mean, Nelson Mandela, not Nelson Mandela. Not Nelson Mandela, the other fellow who lied horribly during the negotiations and then became leader for life in Rhodesia. I can't think of his name. Let me look up his name. In the end result is that their currency, they have a dollar, and in the end their currency went like they had $1 billion note after a while. People were like literally it was just pure disaster in the end result. Let me think. The guy's name is on the end of my lips all the time, and he just passed away. I think he just passed away, and so I'm trying to think. So I guess it's Zimbabwe, and then if anybody remembers who I'm mumbling about, the Leader for Life. He really destroyed that country. You know, just destroyed it. Now like I said, we used to use that as an example of inflation. Because they went to $1 million note, and then I think they actually went to $1 billion note, and so it was that we're not going to go through that in the industrialized nations because we have a lot of electronic markets and credit cards and central banks that are pretty much in control, and so that kind of stopped the situation much better in the sense of not allowing the inflation to go through the roof, and so we're not going to see that, and that's a good thing, I mean that's definitely a good thing. Let's see. I'm going to find his name, and I'm going to be able to say it. President for Life. It's funny how Google has wiped it out. Like, it doesn't exist now. They were big fans of him forever, and now when I Google it, I can't get his name up. I'm going to find it. It'll spit out. And that's that. And there he is. Robert Mugabe. That's it. So he basically destroyed his country and enslaved everybody, and I think he died worth allegedly $20 million. I think that he probably was worth a lot more than that because he definitely robbed the nation and destroyed it as best as he could. So Robert Mugabe, that's right. So that's where we're at. I wouldn't worry about the inflation too much. I mean, obviously, if you're a builder and you're trying to sell houses, it's going to be very tough. There's no doubt about that. Now there are high expectations that the Fed will need to raise rates to curb rising inflation, which will cause sell-offs in the market. Obviously, the dollar will get stronger. Well, we're seeing the dollar stronger at the moment this morning. Let's address that. High expectations that the Fed will need to raise rates. They don't need to do anything. They can do whatever they want. I mean, they control the whole system at this point. They go and they tell what the banks can lend. They basically tell countries where their currency is supposed to be. That's that envelope that I talk about all the time, that channel. When you have that much control, it's not going to be like the 1930s, that's for sure. Production will keep on marching along. Now, obviously, China, they starve people, so anything's possible in China. But and in a lot of the lower developed nations, they don't have the same structure, and so it's going to be bad for those particular areas. But the industrialized and modern nations that have the ability to actually have a civil society on some level, with the credit cards and electricity 24 hours a day, and changes of government. Sometimes in a healthy way, I mean, we've become a banana republic. Mr. Biden didn't really win the election, but the Congress put him in there as president because the states at first didn't know what to do, and then when they finally pulled their votes from him, it was too late. So, I mean, we're all in that boat of smoke and mirrors nowadays. They call it the big lie over here. I think that's very cute. The big lie. We're a homogenized world. Our socialists are in control on some level. They're getting ready to get blown out the door. This looks like 1980 again, where Ronald Reagan turned the South Republican after 100 years of being Democrat. And even to this day, the media never talks about it. And very few people even realize it. But Ronald Reagan, after Jimmy Carter did, and Jimmy Carter was kind of like the standard bearer of how bad you could be a president in modern era. Well, Joe Biden in 4 months has made Jimmy Carter look pretty competent. So I can tell you that we're going to start seeing the fruits of those labors, or let's say the fruits of that disaster in 22 next year. Republicans are going to take the House by storm and probably grab the Senate, not super majority, but take the Senate, and then the following year or two, Republicans will take the presidency and even more government away from the Democrats, and probably bring back our media. We'll probably get a media back here in the States again, and that'll be nice. So, we're probably on the edges of seeing some, capitalism getting back on track 100%. Right now we function as a capitalist society about 75-80%. So we're still functional, the most powerful nation in the world economically, but we're hindered. One of our hands is tied behind our back, and one of our legs is in a cast, because these socialists keep on doing some of the same things that Joe Stalin did, and preached the same things Lenin did, and talked about what Engel always suggested about capitalism, like Marx did, and they were all clueless to capitalism, and they only knew fascism, and fascism is a form of socialism. People like to pretend fascism is capitalism. It's not, and crony capitalism is not. So that's my real conversation, an answer to your question about inflation, okay? And Zimbabwe and Robert Mugabe was a classic, example of that. You can see the problems that South Africa has. That they still have parts of their government from pre-Mandela days, so they're able to function somewhat better than the rest of the other African nations, but they are also hindered because the ANC is a socialist communist group. And the problem is that they're fighting with the Labour Party, and the Labour Party is a total communist thing, and they can't get anything really done, but they're hindered at the same time because people, the media and so forth doesn't tell the true stories, and so then the voters don't really have the correct information to vote. And same thing here in the States. People. In this case here in the States, it's becoming clearer and clearer because we do have that 10% that's getting the message out because of the internet and so forth. So when you take these polls nowadays, you see how many people don't believe what's going on, and so that's why I can tell you, just like Ronald Reagan flipped the South to be Republican in his first election, we're going to see that same thing occur again, and so. Don't be too worried about inflation here in the States. The dollar will stay the way it is. Remember, we are in a controlled environment. The world went bankrupt in 2008. And they did a really good job. I mean, Bernanke was in charge at the time, and his PhD thesis was the Great Depression. So, he was part of this quantitative easing thing. This was his gig. This was where, I think he wrote a book about how, Roosevelt went wrong and how what they should have done. And so that this is what he thought they should have done. And so we're in the Bernanke era of quantitative easing and in controlled central banks. Hence why we don't see gold, and hence why we do see cryptocurrencies. And that's... we're right there. Ben, helicopter Ben, yeah, exactly. And so what we're seeing is cryptocurrencies. I'll finish this conversation about the inflation, is that the cryptocurrencies are a manifestation of capitalism that is taking the control, in a sense, of what the metals used to do. And so what they did is they created paper, gold, and silver. And so what they've done is they've held the price of it down because they're using it as a currency nowadays. And so, many of us, I've said this so many times over the years on this webinar, and that is that if you would have said to me in 2006 or 7 where do you think gold and silver are trading at in price? And then explain to me where the world economy or the banking system is in 2009. I would have said, well, gold should be between 5 and 10,000. I would imagine something like that. Silver should be trading in the $100 range. Anywhere from 75 to 125. Something like that. And instead, the best we've ever seen is what, $2,200 gold here in dollar terms. We've only seen like $51 in silver. It's because the central banks are holding it down. Now, because of the inflation factor, we saw in many other currencies gold and silver rise to all-time highs years ahead of what it did in the United States. Okay? But that opened the door, but that opened the door to cryptocurrencies. And now cryptocurrencies, to a great extent, have a value, and their value is the blockchain technology and the independence from the central banks. That's its value. Now that seems a little funny. People, when I say something like that, people go, ugh, what's that got to do with things? Central banks are central banks. Why do you need independence from them? Well, we all know that they controlled way too much. Oh, here's Stefano coming in. Do you think that the downturn on Bitcoin is also the result of margin calls on NASDAQ? Could be. We saw where some big money moved out of it, what they call whales, like we make oil out of, and the Japanese boats fish for, or whoever does, Russian boats. The whales in the Bitcoin in particular sold out a few $1 billion worth of product at the $65,000 level. And it's now, let's go up on the screen here. Because Robin, that's funny you asked that. Robin and I are doing an article today on Bitcoin and the cryptos. Let's see, here it is right there. You can see here, we've been in the daily sell since, let's make that bigger. We've been in the daily sell since here, but you can see it's just choppy. It's a 55,000, think of it as like a $55, $60 stock. When you look at it that way, it's not that volatile, really. Instead of a $60,000 product, think of it as just like when you see 60, think of it as $60 instead. So bouncing around $3 or $4 or $2 or $3 doesn't mean a lot, And you can see here it's going after what, the 46. What's the low today? They're showing a low today of 46,395. So it's been choppy. We've been in the sell since right here on the weekly. So there's this weekly sell, and you can see, it went down a little bit. We went into a daily sell. I don't think it went into the buy right there. Yeah, it went into the daily buy right there. And right at the top. Doc's math really having its issues with it, isn't it? And then it goes into the sell there. And all that money that you lost, now you make again. You make it back and then some more, because remember it went into the sell here. Let's see if we can draw a line to it. So it goes into the sell. Where's that line at? There it is right there. So it goes into the sell right there, and it goes into, and then trades right back down to it. So it's kind of, really sloppy. It's very thin in trading. They trade 4, 5, 6,000 contracts a day. That's it. That's what the problem with it is in the futures. That's why the futures are not very indicative of accuracy. I just don't have the volume, but you can see here, it goes back into the buy right there and takes that whole hit, right, in our math. Then we turn around and go into a sell, and it comes right back down to right where it was. So it makes all the money back again. It's crazy. And then, crazy. And so then, and then you can see here, it makes now, then it from there, it puts you into a buy for a day, then goes back into a sell there. And then it makes everything that you broke even on because of the two last trades, finally makes you all that money. So then it's a winner, winner, chicken dinner finally. And so out of this whole wrong move, it's still a winner. And then Doc's math goes into a buy here, where is it at? Right there. But we're in a weekly sell, so you can't go short. Then you go short and you get your head handed to you. And so there's the loss. So you got all that loss right there. And then our math goes into a sell here. and it's been in this sell all the way from to here. So it pays with the right staying power and the right position on. Obviously, you make all your money back again. And what I mean by right, you don't over margin yourself, and you can hold the position until Doc's math gets you out. And so that's pretty much the name of the game there. It's a really thin product. It doesn't really reflect the crypto that well, but it is the tool of inflation as far as I'm concerned. So I don't think it's going down, because you can see Ethereum, which is also a thin traded product. We may have to try to put the Ethereum contract up there. I'm going to see if I can put that on there. That's being traded in futures too, and it's about, I think it's about 2 months old now, so we might have enough data to actually start following it. And it might be better on some level because it's a $4,000 product or $3,000 product, and the volume might be better. And so we'll have to watch that at the same time. But this is becoming definitely an inflation type of conversation about what is going on in the marketplace of it and my opinion of it. I can only back it up with fact, and as far as I'm concerned, I have 30, sigma as far as I'm concerned. So that is where it's at. Do you think that the downturn in Bitcoin is also a result? Yeah, so it could be. It could have been a combination of all of it, but there's definitely whales. Matter of fact, I think the whale that I heard that got out of the Bitcoin was having a margin problem in other areas. I did read or hear that on some level, but it's random and stories, and you have no idea how many options they may have on in these things. I told the story about Tudor when I worked up in Greenwich, in the Stanford area, and with the hedge funds and on. And I remember people, because Tudor and those guys are all up there, so we're all communicating and so forth, and you're hearing real stories. And you would see the public get this story. Tudor Jones is long 5,000 oil futures. And at the same time, the trade went through our office. And he also bought something like 9,000 puts. So it's a straddle. But what is the media reporting? That he's long 5,000 future contracts. So he's not naked long. But as far as the media is concerned, they're telling you that he's naked long. So, it's hard to say. I did hear something about that when the whale got out on Saturday night at 65,000. I did hear that they said that the entity that was needed capital for something else. That was one of the reasons they thought maybe it was sold at the time. And that is where we are. All right, where should we go from there? I guess we should look at some of the products. And unless you have a question, we'll start looking at products. And don't be afraid to ask more questions. I have no problem with this, none whatsoever. The markets are the markets, and it's well worth investigating. And we learn from it. All of us do. Trust me, I thought of new ideas just having that conversation. Makes me think of other things that are going on. Let's take a look at the Swiss again, because I don't even think we really dissected. Look at that. Swiss is moving down since the conversation. I think it was up, right? I mean, it was plus when we, I don't think it was yellow. And so you can see here the dollar is weakening up a little bit, nothing major there. The euro was pushing into a sell this morning from yesterday's daily sell, and it's still down a little bit, but now it's starting to perk up. So you can see that action there. Oh, that's the oldest trick in the book. Say one thing in the media and do the exact opposite. Oh yeah. I used to say that. What was it? There was something. Someone was famous for that. Like literally, you could, if they said they were, it might have been Ivan Boesky or someone like that. If they said buy, you knew you wanted to sell. I know who it was. Goldman Sachs. Goldman Sachs, before the financial disaster, of 2008. Before that, if Goldman Sachs told you to buy something, you definitely did not want to buy it. Because a day later, it was down and heading south. They may have pumped it up for a day, but oh my goodness. I remember Goldman was like that for decades. There's Cable. Cable has pushed itself into the daily sell at the moment. We'll see how that goes the rest of the day. Do you have some idea on that? Let me think. On what? On idea on what? Oh, I'm sorry. On what? I've lost where my head is at. Doc's in 5 directions at the moment. Hey, Middle Age, how you doing? Thank you for telling me that the screen's covered. Do I have some ideas on that? Oh, and there you go. There's something too. Let's see. Tesla says trick of the book. Okay, copper. I'm a little bit surprised about the downturn in copper. Hey, make it 2 of us. Because if you're gonna have there's only 3% of the world that has electric cars and vehicles. So you would think that for all the armatures that you need and all the copper you need to build electric cars, you would think that it would be $9 or $10 a pound, or $16,000 a metric ton or something like that. Here, let's take a look at copper. Right there. It's really weird. Looked like we went into a daily buy the next day after that sell, but it failed at it, and by the morning it was in the sell, so we were still back into the sell again. And you can see it's odd. The thing has been going down. It could be just the excitement. Now this morning, you can see here, we didn't have that this morning when I sent out the charts through Chicago Quant, but you can see right there, we are flirting at the moment with a possible daily buy again. And you can see even with this little selling going on, which is not exactly deep, we're at basically all-time highs. And at the same time, we've been in a weekly buy since here, right there. So since the 430-ish area, we've been in a daily buy and in a weekly buy, and it took us up to the almost 60 area, and then it did that same type of correction we're going through right now, and then we went into another buy here at the 460 area, and the next thing you know, we're at the 480 area. So this could be just another little digestion, and the next thing you know, they're going to take it up again. Let's see. I want to make sure I'm getting everybody's questions here. That's the oldest trick in the book. Copper. I answered copper. Do you have some idea on that? Oh, what on copper? Like I said, there's 3% of the world has electric vehicles total. So there's got to be a lot of room to buy more copper to build more electrical devices. Let's see. Can you see? Yeah, you can see. Okay, good. Let's see. Laugh out loud. I am funny. I'm going to go to an open mic thing one night. You watch. And I will inform you the next day how fast they booed me off the stage. But I've been wanting to go to an open mic thing for a while now. I really do. I am a miss of it. I really I just think that I think I want to be crazy. Yes. Oh, good. I was on the right subject. I like that. Doc likes to be on the right subject. That's good. Thank you. So it was copper. Excellent. All right. So where else are we at? What else can we look at here? We can look at everything. I think we've been talking about inflation all day. Middle age. I hope you're doing all right there with the metal complex. Let's take a look at gold and silver while we're here and you're here. They are flirting with the daily sell. They just missed your 50, so they got up to 46 and change there. Let's see, silver, I think is in a daily sell at the moment as we speak. I mean, I think it closed there yesterday. Yeah, closed there yesterday, daily sell. You can see it's coming down. That is, and you can see a little bouncing going on. I think this is just like the copper copper chart. Let's go back to that. It did that little digestion thing there. In that case there, it was rising. Notice it did it there too. It was rising. This is rising, and it was doing the rising thing. And if this thing closes up around the 80 area tonight, or 75, it breaks yesterday's close. So if it closes above 75, say 74, 474, that might be the beginning. And if it dares to get into a daily buy and we lose that red dot, this might be another little 20-cent leg. That's what that could be there. Oh yeah, you got plenty of time. Oh yeah, you got plenty of time. Oh yeah, good man, good trader. You were a good trader. I on my when I trade short term, I'll go with like I don't know, 12 days, 14 day of trading, 13 day. And if I'm trading long term, yeah, I go 3 month. Yeah, definitely. definitely, and especially you can sell out the tops. You can set up things way out there to catch some of the decay factor. It's a binary concept. And so yeah, good man, smart. September and August, exactly. Who knows? There's also that crazy potential. You notice when the futures contracts expire and the London New York arbitrage has to be closed out. Notice those explosions you get in on the upside. There have been some really good super explosions on the upside in the metals market. Uh, going into the last 3 or 4 weeks of the London New York arbitrage, where the contract is getting ready to expire and the delivery process explodes the price up. So yeah, that's smart. Both of those. Isn't SEP silver like the next contract after July, and August gold is the next contract after? Or are we already doing August gold? We might be doing August gold already. I think that's the front month, right? No, we're doing June. So we go once we're done June, we go right to August. I think that's the August contract. So that's smart to align it with the potential of an arbitrage squeeze from London to New York. It's a good move. All right, where am I at here? We're just this is Doc's Trading Pit. We're here. We're all equal. We're all allowed to throw out ideas, get involved, look to discover or figure out what's going on, and that's what a trading pit is all like. That's exactly what it is. Instead of us being in the trading pit of gold or the trading pit of silver or the trading pit of the S&P 500 or the Deutschmark, which doesn't exist anymore, the Euro trading pit, we are now in the Doc trading pit, and we're just trading ideas. That's what it comes down to. All right, we'll jump back to the currencies. Let's go see what the Turkish lira is doing. We keep on thinking that baby wants to lift itself. Lift, 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 lift. Right there. There's dollar. Yeah, there we are. We're inching our way to our cute little dotted line. I think we're going to make it even fatter. Let's make that dotted line even fatter. As it gets closer, we'll make it fatter. And closing the daily buy there yesterday. You can see we are definitely looking very firm here. It's the day before TGIF, and it's looking very firm. Looking down at the euro, which warned us, the euro versus the Turkish lira pairs trade went into the weekly buy off of a crazy spin on the Friday before, and baby, look at that! It looks like an aircraft going off of the off of the aircraft carrier, or it could be, like Alan Ball trying to put the ball into the net from Southampton back in the old days. And, he aircrafted the ball right over the net and missed the goal. So either way, it looks like a rocket shot. And so you can see, now get out of the way, McPhee. I think they locked him up again. He's in trouble somewhere. And so there is that. That's the Turkish lira finding in one direction, and that is up, up, and away in that big, beautiful balloon. All right, Canadian. Let's see. Canadian had, I thought yesterday, I laughed at myself when it closed in the daily buy there yesterday, right there. I thought, oh, will they knock it down like this one here? Where was it at? Oh no, it was this one right there. They went into the daily buy. Somehow the line is missing here. There, and let's do this one there. So it went into the daily buy, and then it went right back into the daily sell the next day. Let's reverse those. That one like that, that one like that, and that one moves back like that. There we go. So we're in a weekly sell from here, right from here. And we went down and we did that 1 day daily buy, and then we went right back into the sell and had another slap down. But look at that. Today looks relatively firm. So the Canadian versus the dollar is looking relatively firm there. All right. Let's jump over to the NASCAD, the Looney trade right there. And you can see that slide from yesterday. And we've been in the daily sell since right higher. So that's been a winner, winner, chicken dinner right there. That was a lot of instant gratification after just 2 days in the position, you know. So you're short here, and next day like, oh, maybe I shouldn't be short, but Doc's in a weekly sell right there, so oh, maybe I'll stay short. And then wow, you get 3 chickens for it. How nice. All right, winner winner chicken dinners. It's takeout. All right, and then let's see where we at. Okay, so then from there we go to the oil complex. Let's check that out. What it is what it is. Right there. Earl is moving down. Let's see. Canadian's moving up. And what was NASCAD doing? I think it was sideways, right? Yeah, sideways up. So yeah, oil is kind of where it should be. Should be. Is it going down or up? Let me just double check again. Yeah, going down. It should be going down a little bit. Nothing major, but in this case here, it's definitely bigger. I mean, you can see here, it closed at 66.08 yesterday, and today it's trading as low as 64.13. So it's a smack a doodle. Let's reload that puppy. Yeah, something's got it in the chilly willy area, doesn't it? It's being scaled. Let's see. Stefan says some comments on EuroCAD. Well, we'll take a look at it. Why Euro is so weak versus CAD? Good question. And it's an oil connection. Ah, interesting. Yeah. Let's see. What was that? Euro CAD. Let's go find a Euro CAD for you. I don't know it is an oil connection, but then I don't. I drag around some of those old ones, the NASCAD more and the Canadian, but it could be. It could be influenced by that. Let's see. Let's see. Maybe there was a panic to buy it at one point. There's Euro that. There's Euro Aussie. Let's do it in the Euro Aussie. Wait a minute. Do we follow Euro Aussie? Where's my fact check spreadsheet? It's been up. We've been up here yakking away without the yeah, we followed the Euro Aussie, don't we? Right there. 5 weeks in a buy, 1 day in a buy. All right. So we can't wipe that one out. Let's see if we can find another one. Or is it even on there? There's Euro Swiss. Let's put it on the Euro Swiss. And we'll see how that looks. CAD. Right there. CAD. All right, what do we got to say about this, about that? All right, went into a weekly buy right there. Let's scrunch it up a little bit to get some flavor out of it. And we went into the weekly sell, well, maybe even further back, but let's just see. Remember, we've switched this. So let's make the weekly a little bit wider so you can all see it together. Wow, it's been in a weekly sell for a long while before it went into the buy. Maybe right around here. Let's see what that is. That is a sell right there. What is that? Is that a sell right there? That's a sell right there. Okay, so it went into the weekly sell back in January of this year right there. And then we can move all these things out of the way. All right. We'll just erase them. I think we're only going to need one, right? that's all we need is one. Remove. And then we can go like this. Goes into the buy right there. So it was in a weekly sell from the beginning of the year, from the 1.55 area, 1.55 area here. And it slowly drifted down to the 146 area. And then what did these dailies do? Let's see how the dailies treated it. So that green is that. So we'll go like this. So it went into the sell there. And we didn't go into a daily buy until, not there, right there. Went into the daily buy there. And then we went back into a daily sell right there. And then we went into a daily buy right there. That was a lot of winner chicken dinners on this one. Sell right there. And we went back into a buy there. And that turned into a sell. We just changed the color, so that's cool. And so it was a pretty good winner chicken dinner all across. Follows the dailies nice, that's for sure. And then you can see here it went into the sell. Steal this sell. Put it right there. Went into the sell right there, and it's still in a sell. And we've been in, oh no, wait a minute. We're in a weekly buy, so you can't be in a sell. So let's grab this buy. So we went into the daily buy. Where did we do that? We went into the daily buy right there. And then it finally went into the weekly sell right there. So all you were able to do really is catch that nice pop. Unless you were in options like middle-aged muscle or binaries. And then you can see we went into a daily sell there and finally went into the weekly sell right there. Back in there. So out of, it's only had 3 signals in 5 months. There it is. And so we're in the sell here, and it's been a winner chicken dinner again. So how's that? I don't know if it's an oil connection or not, but that's the action we've seen in it. How's that? Saying well, big oil production in Canada, if oil prices. Yeah, I would say no. I would say no for one reason, and that is let's just take a look at oil and see if it trended from January that strongly. It may have. We went into the weekly buy in oil back in December, and it rode that puppy all the way to where? All the way to April. So, yeah, maybe I take my words back, I mean, the evidence is definitely physically there that there was great influence. The oil, oh no, wait a minute. Yeah, December. No, November. So it went into a weekly buy in November at the 46 area in oil, and we didn't leave that weekly buy. Now remember, what is it? Let's go back to let's tighten that up so you can see it. So you can see here, we went into a weekly sell in January. We'll see what oil did in January. So in January, it still was rising. So 5 weeks earlier, oil went into a weekly buy and rode. Maybe that's just a coincidence, possibly more. How does that make? Does that make any sense? I think that's kind of interesting now. See, that's why I like answering questions. Never would have thought to look at the two, oil and the Euro Canadian. And when we go and look at it in this situation, they both have some really long trends. Now that's interesting. It tops out in the middle of March, heading towards April, right? We don't confirm it until the beginning of April, the first week of it, really. And so now let's go take a look at it. It topped out in the middle of April. It went into a buy, just like when it went into a sell, I guess. You know what? There you go. March, it broke down pretty well, And what did oil do in March? It broke down also. No, they're both the same direction. I don't know. I guess we have to investigate that a little bit more. But that's very interesting. I think we'll leave that in there and try to pay attention to it a little bit more. All right. This is Doc from North America. Today's webinar was brought to you by inflation. And that will be the title of it too. Inflation. What makes inflation in the 21st century? Or inflation in the QE era. How's that? Something like that. That's the way I look at it. All right. Happy trails to you until we meet again, which will be TGIF. Happy trails to you, to all my cyber trading pit friends. Ta-ta for now.